If you think Bitcoin's move to $91,000 is just another dip, you're missing the real story. What's coming next could liquidate millions or trigger the biggest rally of 2026. Before we start the video, if you're looking to trade or invest with BTC and other crypto, then this is the channel where you will get most important updates. So subscribe to the channel and hit the bell icon so you don't miss updates. After breaking down and closing a weekly candle below the weekly 50 moving average and a multi-year support level, Bitcoin is now trading around $91,000. As expected after Wednesday's pump, we moved into consolidation. While BTC continued to push slightly higher, many alts showed weaker momentum and stayed within a tight range near the resistance levels. There was no significant bounce to the downside, which keeps the bias leaning more toward the bullish side for now. In short time frames, we still have more liquidity above $92,000. After taking out that liquidity, market might reverse back to wipe out the liquidity that was created around $85,000 and $83,000. When we look at the long time frames liquidity levels, we have $5 billion worth of liquidity to take out if the market moves to $111,000. But if Bitcoin keeps consolidating like this, it makes more sense for market makers to wipe out liquidity below $85,000 before any pump, unless we keep dumping after a dead cat bounce. Either way, 2026 has many more bullish catalysts than 2025. Jim Cramer said on November 21st live on CNBC that he's now bearish on Bitcoin. At least 3 rate cuts, Trump's $2,000 dividend, new Fed chair is going to be most likely pro-crypto, SLR easing, possible QE buy, or before midterm elections. All these catalysts are bullish for BTC and crypto, as they will improve the overall liquidity. Even though we see Bitcoin dumps till the end of 2026 Q1, fundamentally, we are bullish. All the dumps we saw feel like clever market manipulation. But remember, the pump we see right now could be a dead cat bounce, or it could be the market pricing and rate cuts. Technically, we are still in the bullish structure. Until the Bitcoin price breaks below $74,000, it remains a possibility. So always be prepared for it. Until that happens, we remain in a bullish structure, even though we have broken below the 50 MA and the multi-year trend support, both of which acted as significant supports since Q4 2023. Let me give some hopium. The Bitcoin weekly time frame has printed a hidden bullish divergence the last times we saw this happen, which ended up with Bitcoin having a big rally to the upside. The last 2 weekly bullish divergences this cycle resulted in a 160% pump in Bitcoin. Lastly, what we want to say is the market is very bullish fundamentally, but a good investor always follows his plan and is ready for the worst scenario. This move to $91,000 is only the beginning. The real danger and opportunity is in what happens next. Watch the next video to see why.